This is absolutely crazy. This is crazy. Go NIO. The glass of water is not even moving. And I'm a car guy myself. This is nuts. NIO's taken the market by storm. This is why I love NIO. Doing things that nobody else is doing right now. Nobody. Like, look at this. It's insane. Hey guys, Corey here. Welcome back to the channel. If you haven't already, be sure to subscribe, tap the bell so you guys know when I post new videos. And be sure to give me a like as it greatly helps the channel grow. Let's get right into the subject at hand, and that is what's going on with the market. Is it over? Is it the end? Is NIO, SoFi, Palantir, SoundHound, our favorite stocks, are they going to survive? And see, what's really going on here is the stock market dumped last week, and a lot of people don't understand why. Well, there's a lot of things that go into that. The beginning of the year, we were going to have 6 interest rate cuts. Then they moved it to 5, then to 4, then to 3. Now we're down to 2, November and December as of right now. And the reason for this is because we got the unemployment numbers back a little while back, a couple weeks ago, and they're actually down lower than expected, which is good. It's good for the economy. It's really great. Then they got the retail sales data back just over a week ago, like I think it was like 8 or 9 days ago, and they were anticipating a 0.3 increase in spending. However, there's like a 0.7 increase in spending. So again, that's like really good stuff. That's exactly what we want to see in the market. However, not good because it means people are spending a lot of money. Everybody's employed. And so now the government and the feds are not really interested in cutting interest rates. They're just not going to cut them because there's no pressure on them because people are spending money. Unemployment's low. So there's no real rush or urgency to do such a thing. And this is just one of many reasons. But because of that, everybody realized that the interest rates aren't going to get cut till at least November, December, most likely maybe even into 2025. That gave, a wrong sentiment into the market last week. You have multiple things that factor into interest rates, but one is unemployment, which ours is low. And then the other thing is the spending data, which we're spending more money. Therefore, the economy is doing fine right now, and therefore no rate cuts. And the feds can't rush and be hasty to cut rates because that could create a problem and inflation could come back and it would be even worse. And see, a lot of traders, day traders, swing traders, they get the wrong sentiment with this. They realize, oh, we're not going to get any rate cuts. Let's just get out of our positions and start selling in case things get bad. Then, on the other hand, you got the issues in Israel and Iran. And what happened last week was there was a situation where Iran fired a bunch of missiles and drones. Almost none of them landed, very few, almost no damage, really. Nothing major happened. Everybody was watching the market like crazy on Friday. Tensions were high because of Israel and Iran. And then all this data came back and there's not going to be any rate cuts. And then Iran announced publicly that they were just going to send like 400 missiles into Israel and none of them landed. And so it made Israel look really strong, but people were afraid that tensions were going to get worse. So they kind of sold off last Friday, this like the week before, not this past Friday, the Friday before. So now we go to the weekend and Israel didn't respond or do anything. Nothing happened for a couple of days. And it's like, okay, what's going on in the market? So people started buying again on Monday. And then after that, Israel said, we're going to attack. We don't really care about the outcome, even though the United States is urging them not to respond and to not attack them. They went ahead and attacked Iran anyway, so the tensions went back up again. And so the things have just been going crazy in, the Middle East right now. And if we do, in fact, have a regional war, like I said in my previous videos, we're going to have an issue with the fact that crude oil is going to go up. If that goes up, the CPI index is going to go up. The feds are not going to cut at all this year, and they may even increase, and things will just get a little bit messy. Now, if we're looking at the market right now, even though we're not getting any interest cuts until November, November or December, all the earnings have been pretty good. Wells Fargo, Citibank, Bank of America, JP Morgan, and Chase, all of these EPS and earnings calls were good. And now we've got the tech sector earning calls and the fintech earning calls coming up. And as long as the earnings in these sectors are good like they've been so far, then the stock market's going to be okay. As long as the Feds do not increase the interest rates. If they stay the same and all the earnings throughout the rest of the year are pretty good, then we'll probably have a neutral to semi-bullish stock market for the rest of the year, as long as we don't have a regional war in the Middle East. Now, I want to talk about something. I'm not a day trader. I sell options mainly, and I trade weekly, bi-weekly, monthly, and even up to 10 months or a year. So if there's a regional war going on and the stock market pulls back, there's no need for me to worry because I'm longing everything for years and years and years. This is not going to affect me long term. And if you're longing, it's not going to affect you long term either. And what I'm trying to say is that because I'm not getting in and out of the market every day, there's no need to pull everything out, wait a week or two to get back in to see what's going on over there. I'm more of an investor. So if you're an investor too, then this shouldn't affect you. All you want to do is dollar cost average. In fact, this is a buying opportunity. Anytime you see the market coming down, you can dollar cost average and get in cheaper. I actually spoke with a colleague when I interned at JP Morgan about this when I was in college. We talked about what would happen if a war broke out in the Middle East, because there's always been tensions there. And pretty much everything that's going on now is what we discussed: inflation, CPI data, unemployment rate, retail data, all that kind of stuff. We always used to discuss that, with the Ukraine war going on. If anything broke out in the Middle East, it would be a buying opportunity once the markets pulled back. So we were discussing this back then at JP Morgan when I interned there. I actually spent some time over at Charles Schwab for a while too, just after I left JP Morgan. When I was at Charles Schwab, we discussed the same exact thing. It seemed like an ongoing thing with fellow, investment bankers. There was a guy I sat beside that used to trade hundreds of millions of dollars in options. And I even had a discussion with him. What do we do if the market pulled back greatly or inflation got worse due to a war in the Middle East? And what if things got worse in Ukraine? And we had the exact same conversation. Wait for the markets to pull back 10, 20%. It's a buying opportunity. So I don't want you guys to feel fearful right now. Remember, whenever there's fear in the market is the time to be greedy. And whenever there's greed in the market, it's time to be fearful. That's what Warren Buffett said. And he is a master at trading and investing. Is it really over? Is it the end? Well, I don't think so. I don't think that's the case. I think we could get a little bit more of a pullback, but it does seem that the market has stabilized a little bit, and it does seem like it's on the way up. But you know what? It is time to use this as a buying opportunity. So if you guys want to be strong and have strong portfolios, if it looks like a pullback is coming, dollar cost average. It's the best thing you can do. If you have 100 shares at $10 and then the price goes down to $8, you buy another 100 at $8. You now have 200 shares at an average cost of $9. So what happens is when you have an average cost of $9, that's your break even. It's no longer 10, it's 9. So once the stock price goes back to 9, everything after that is double profits. You always want a dollar cost average. If the stock price goes to 8, you buy another 100 shares, then we have more of a pullback to go to 7, buy another 100 shares. Because once the stock market does recover, and it always does, you've now dollar cost average down. So when the market recovers, you're in better shape. And you can also sell covered calls, which will help you collect even more juicy premium. So you don't have to worry about a market sentiment like this. When there is fear, it's time for you to have some greed. I just want to point out that I'm not a financial advisor, and this is not financial advice. I'm just guiding you guys on technicals, fundamentals, financials, how to hedge your portfolio, different strategies in the market. However, it is up to you to decide which stock to put your money into and how much of a position size you want to have. I want to show you guys something pretty important here with NIO. You can see the downtrend here. We broke below the 100-day moving average, and the 10-day orange is below the blue line, which is the 20-day moving average. However, on the 1-hour chart, you can see the 10-day moved above the 20-day moving average. NIO came up to 407, came back down, and the 10-day fell below the 20-day average. We can see that the 10-day moving average crossed over the 20-day moving average on the 1-hour chart, and then the price went above the 100-day moving average. That is very big. It looks like some bullish momentum. Let's go ahead and look at the the volume. You guys can see here a little bit of red volume, a little bit less red volume here, and look at the green volume right here. All this bullish volume. 1, 2, 3 hours of bullish volume. If you look right here, you can see this big bearish volume. However, it moved nowhere. All this green volume, price went up. Bearish volume, price stayed the same. We now are at a rejection and new support right here. So this is what I anticipate for NIO. We're looking like we're going to come down a little bit tomorrow. We're looking like this week it's going to come down a little bit, bounce, and come back up. And it looks like a little bit of a recovery for NIO. It looks like we could test 425 to 450 again, and then we could probably run for 450. If you decide you want to sell some puts on NIO, you can do that as well. You can sell covered calls. Right now, I'd feel pretty safe selling a $4 put because I don't think NIO is going to be much below $4. I think we're going to start breaking above that. And since we're at $4 right now, it's a pretty bullish move. You can sell it this week for $12. We can go out next week, which is a little bit better, more premium for you guys. And we collect this juicy $21 premium. Could probably squeeze 22 out of it if the price dips a little bit below 4, but I would just take $21 anyway because then our break-even price is $3.79, which is really good. NIO's already priced at a heck of a bargain right now, so you can't go wrong selling a put at $4 and collecting $21 juicy premium. So we'll go ahead and review this order and $400 collateral, collect the premium. And next week, if you get assigned, you get to buy the shares you already wanted to buy. You could also sell covered calls and generate lots of income in this time. And because of the fear in the market, now is the time to be greedy by selling puts. But you could also sell covered calls. So we're just going to select the date for next week. You're seeing this in the future. It's the exact same setup, just a different date. You can see here, if we select the $4.50 contract, we will collect $6 juicy premium every single week. And that's because NIO is at $4. It's pretty far away from 450. If we wait for NIO to come up a little bit to say 410, 415, or as close as possible, you might be able to squeeze $10 to $11 a week out of this until it gets closer to 450, and you'll sell $5 calls. But if you figure you do this every week, you can generate anywhere from $24 to $50 a month selling covered calls on NIO per 100 shares. So even though the market might be pulling back or might be neutral, doesn't matter. You can continue to make money on your investment. And if the market is going down and you sell a $4.50 call and NIO drops to $3.75, you can roll your call out and down to $4. And if NIO is to drop a little bit more, you could roll out and down again to collect more premium. And you can keep doing that. And if NIO goes to $4.50, which I believe it will very soon, then you can just roll out and up to $5, maybe a week or two, and collect more juicy premium. So you can't really go wrong selling covered calls on NIO. Hedging your risk and hedging your portfolio is very important. Buying puts, selling calls, selling puts, trying to make all the premium with options that you can. One of the things that we discussed at Schwab when I was there for my internship was hedging risk. And we're looking at NIO here. And if you really want to hedge your risk, let's just say for the next 6 months, we want to go out to September or November even, and we buy a put right at where your average cost is or right below. You don't really want to be too far away from that. So on NIO, if your average cost is say $7, we'll probably buy a $6 put. What that will do is if NIO drops to say $1, you can sell 100 shares at $6. This contract will cost about $200 is where we could get filled at. So if things start to go our way and NIO doesn't go down in price but stays the same, we're only going to lose the theta, which is not very much. If we see this theta right here, to lose 10 cents. So it's like a cent a day. It's like 1 penny a day. So we could hold this contract for a month and it would only cost 30 cents if the price didn't move. If NIO was to go up to $4.50 or $5, we would lose $75 off it. We'd have to just sell it for $125 or $135, but it's insurance. It's a hedge. And if NIO was to go down to, let's say, $3, then this would be worth like well over $300. So we would get back what we're losing. And because the gamma is 19, that means after NIO's moved $1 in either direction, this delta becomes 94. That means 94% of the move. So if NIO moves $1, this option moves 94 cents. So if you want to hedge your portfolio like this, for every 100 shares you have, you can buy a put option, and that is insurance on your shares. You can also sell covered calls like I was showing you how to do, and you can dollar cost average by buying more shares at a cheaper cheaper price, giving you a lower break-even price. So when the price starts coming back up, you have more shares in your portfolio, doubling down on profit. With the Fed data and interest rates in the States, the fear sentiment in the market due to that fact, as well as rising tensions in Israel and Iran, what should you do? Well, I wouldn't panic and pull the plug on your portfolio, because in 6 months, a year, 2 years, 3 years, 4 years, is it really going to make a difference? I don't think so in long term. Even if a regional war breaks out 2 to 3 years down the road, I don't think it's going to matter as much as it does today. And in 10 years, it definitely isn't going to have much of an effect unless they have some 10-year war, which I can't really foresee happening, especially with all the peace talks going on and the way the world is today. Long-term investing, which is what I'm doing and what I'm assuming most of you guys are doing, makes it a little bit safer in this situation to dollar cost average, play the long game. If we're long on something, short-term events like this matter less. So I would not stress out and I would not worry. When tensions rise and the market starts to fall and the fear increases, and remember, dollar cost average, sell covered calls, sell puts. This way you guys are making money the safest way possible. Thanks so much for being here, guys. I really appreciate you. If you're enjoying the channel, be sure to subscribe, tap the bell so you guys know when I post new videos, and be sure to give me a thumbs up as it greatly helps out the channel. I will see all of you guys on the next upload, but until then, remember, let's grow our wealth together. Take care, guys.